gentlemen, without taking further time, we start with the next session on a very exciting topic, a panel discussion with eminent experts on digital lending 2.0, transforming the lending landscape in the NBFC industry in India. So before I introduce the honorable and eminent panel members here who are industry experts in this particular subject, a few pointers of discussion which this panel is going to cover are traditional lenders digitizing quickly, analytics and scorecards-based credit decision-making in digital lending process, cost reduction and time saving with digital lending, real-time risk management in digital lending process, and many more. So without taking further time, ladies and gentlemen, please help me welcome the honorable panel members in the order of the sequence. Joining us first in the panel, we have Mr. Sanjay Jaiswal, Head of Application and IT Security from Nuvama Wealth. A big round of applause to Sanjay ji. Welcome to the panel, Sanjay ji. Please have your seat. Joining next in the panel, we have Mr. Unni Krishnan, Vice President Digital Transformation from Shriram Finance. A big round of applause to Mr. Krishnan. Welcome to the panel, sir. Please have your seat. Joining next in the panel, we have Mr. Prasad Ajinkya, Director IT from Homeville Group. A big round of applause to Mr. Prasad. Welcome to the panel. Please have your seat. Joining next in the panel, we have Mr. Puneet Taneja, Head Digital Transformation from Hero Housing Finance. A big round of applause to Mr. Taneja. Welcome to the panel, sir. Please have your seat. Joining next in the panel, we have Mr. Nageen, Kommu, founder and CEO of Digitap. A big round of applause to Mr. Kommu. Welcome to the panel, sir. Please have your seat. Joining next in the panel, we have Ms. Tanya, Chadha, Business Head, Partnerships and Alliances from YouGrow Capital. A big round of applause to Ms. Tanya. Welcome to the panel, Tanya ji. Please have your seat. And now I would like to call on stage the honorable moderator for this panel session, Dr. Malcolm Athaide, CEO from Agrim Housing Finance. A big round of applause to Dr. Malcolm. Welcome to the panel, doctor. Please have your seat. And a great panel we have here of experts. So all over to you, doctor. And wishing the panel a fantastic session ahead.
Yeah, thanks. Thanks a lot to Synex for organizing this NBFC session. And I think we have a very eminent panel. You can see all the chairs are full on the panel side. And I'm hoping it'll be full on the other side too. Without much ado, I think we've already done a round of introductions. So I won't get into another round of introductions because it's already been done. But we'll start with the lady in question because we have ladies first and she's on the right side of me. I hope I'm not on the wrong side of you. Okay, so before we start, we just did some round of thinking of what exactly would be the themes. And we have used the themes as per the focus of the panel discussion in terms of transforming the lending landscape in NBFCs, that is digital lending 2.0. And as we go through the themes, you will find out that there are a lot of things that are relevant to all of us today to make the transition or make the leap from being good or being normal to being there. Okay, so over to you, Tanya, first. I think you have this. So just to get on the area of your work related to partnerships and alliances. So how do partnerships and collaboration with fintech companies contribute to the success of digital lending initiatives for NBFCs? And if you could give me some experience or any examples that you see from your work.
Thank you, Malcolm. I feel that, in today's evolving businesses and landscape, partnering with a fintech leads to an innovative collaboration. Two major advantages that I see in this is, one, it gives us an access to specialized knowledge and resources which we may not have in-house. Secondly, I also feel that partnering with fintechs helps us to tap into the latest technology, trends, and best practices in the industry. It's because of these alliances we see that today our traditional lenders are moving away from old age products to new age products. For examples, They are ready to finance a receivable-backed product, whether it is insurance receivables or a school fee receivables. So having said that, there is absolutely no doubt in my mind that partnering with a fintech does add value to NBFCs or even a bank.
Yeah, thanks, Tanya. If you can give any example from co-lending experience that you have, how exactly they bring the trust factor to the customer, how does it get personalized to the customer?
See, today even the regulator has made it mandatory to ensure that the customer knows who is funding them. So right from documentation to activities like welcome call, EMI reminders, soft collections, is become a responsibility of both the lenders. So there are enough and more touch points where the customer knows where the liability is and who he can approach in case of a issue.
Yeah, thanks, Tanya. My next theme is around digital transformation. And I'm asking the person who has the largest balance sheet on the panel, Mr. Unni, Krishnan. What is your experience on the challenges and opportunities in digital lending in terms of doing the transformation in your organization, and how does it translate, especially in the underserved and rural segments that you all work very efficiently in?
Malcolm, I represent Shriram, and we got a legacy of almost 50 years in the financing space. What we realized is that we predominantly service customers in the roots of the country. And when we talk about digitalization, I realized that even the rural markets and the semi-urban markets are digitally savvy. But the problem arises because unlike a tier 1 customer who can do things on their own, or rather, I would say that a semi-urban or a rural market is more relationship driven. So in spite of the customer knowing how to do things, he still wants a relationship manager or a relationship executive to guide him, or it's more like this. When we were growing up, I think the first life insurance policy that each of us would have bought is from an uncle around the place, somebody whom we know, a trusted family member kind of a person. So that same is the concept that still works in your semi-urban and the rural markets. Till the time your relationship executive talks about it or guides him through this, the digitalization journey doesn't work. I'll just give you an example on this. Post-COVID, what we realized is that small ticket personal loans, it was quite an expensive option to service a small ticket personal loan. But when you do it digitally, it becomes easier. The customer gets the money 24/7. It becomes much more convenient for everyone. So what we realized is that once we rolled out a product for the semi-urban and the rural markets. And when we did that, the first thing that we did is, rather than going and educating the customer, we wanted our internal customers, that is our employees, the ground staff, to understand that if you go digitally, the best part is that it reduces their mundane activities and also becomes faster. So once the field force were convinced that this is a much more faster way of doing things, they were able to educate the customer, because when you do some targeted campaigns towards the customer, the first thing that the customer does is he looks through the whole journey and then he makes a call to his executive that I've got something like this, should I do this? Until and unless you don't get a green signal from your trusted ground level executive, it doesn't work. So we capitalized on the relationship management thing, and it really worked. And today we have, on the online journey, even in the rural markets, today we have customers doing a self-service, they do an e-signing of agreement, they do an e-NASH, and the whole journey is done all by themselves because our frontline force is also supportive of that. So that's what I wanted to comment on this.
Yeah, thanks, Unni. I just want to push my luck on that one question, and I'll push to Puneet. In Hero Housing, you have the same things, and I just wanted to understand, how does a brick and mortar company work in the digital lending? Can we marry this at the branch level? How does the customer segment work with this?
Thank you, Malcolm. You are right. I mean, if I were to design a digital journey for an urban consumer, it's pretty easy, right? Today, if an RM walks in from a bank or an NBFC, I need to take out my mobile only to give an OTP. KYC can be fetched from DigiLocker. Bank statement can come in from account aggregator. I basically don't need anything. Within 10 minutes, I will have the sanction letter with me. In case of the rural market, or I would say the underserved customers, there are some very unique challenges. Technology can do everything. However, things like people not having their mobile number linked with Aadhaar, I mean, these are some of the problems very difficult to solve. How do you do it? The moment you face these challenges, digital verification of KYC becomes a challenge. Then you cannot do an e-sign or an e-Aadhaar. When you move on to underwriting, a lot of these customers are NTC customers. They are availing credit facility for the first time. So whether you're giving a personal loan or a credit card or a home loan, some of these things, I mean, there is no data to rely on whether the customer is good enough to give a loan or not. Then, very strange, video PD. I'm not even going into the technology challenges. The agent is available to do a video PD. The customer is available. But there are some unique issues. I mean, people want a male member in the family to be around to do a video PD. I mean, those are the kind of challenges we have seen. And you will have a woman who is a co-applicant when they are availing a mortgage product. So, some of these things are very, very unique to the rural market. And talking about digital lending replacing the conventional brick and mortar, I don't think that is going to happen because the physical POPs are going to be there. I agree with Unni. When we are talking about affordable housing or any financial product, I think the human touch will remain. The person on the ground will be required to help the customer complete the journeys over there. I mean, we have seen NBFCs in Kolkata and Jaipur who have become banks recently. They have grown big just because of the physical presence around. So while we can design the journeys here in the metros, I think the physical presence will continue to remain. That is not going to go anywhere soon. Technology is not going to take any jobs, just that people will move from one job to another.
Thanks, Puneet. Well said. Now coming to the technology platform, and this is, I think, from lending technologies, lending processes, digital lending 2.0. My question to you, Prasad, what are the technology platforms that we can use? Is there something where we can do real-time assessment, real-time risk management, real-time customer onboarding, and how relevant it is for the segments which are like MSMEs, which are quite underserved in India?
When it comes to underwriting the loan application or verifying the loan data or checking whether the loan application has any fraudulent data or not, this is where a technology platform can perhaps help. There are services where documents submitted, something like a bank statement, which could be fraudulent, can be checked and can be flagged off. There are services where data submitted can be checked against a national registry. There are APIs that are available. I mean, there are enough and more service providers will give those APIs that can be checked and validated whether the information provided matches or not. Eventually, if you look at the customer journey, if you're onboarding a new customer and you're getting additional data, maybe from a sourcing partner or maybe from a DIY journey, as a technology platform provider, you'll typically want to say, there's a common saying in security as well, that in God I trust, everyone else I suspect. Right? So all data that I can validate, I can cross-match, I can refer and check is something that I'll want to do. And therefore, document processing, address data, okay. We had one person in the earlier panel saying that even electric bills had to be verified. This will always be there. We have a slew of alternative data providers out there over a period of time. As your product teams become more comfortable with those alternative data providers, they will start integrating that into your underwriting decisioning. Your credit teams who also want to build their own credit model will also eventually want to work that data into their own scoring models, right? So I believe there's a whole bunch of work that we can still do on application data, checking for frauds, data validation, data verification, data audits.
Thanks, Prasad. Now there was a slightly more interesting, different topic, which is from the lending thing, is the threats. You have cybersecurity and threats, and lending technologies has nothing which is away from it. And we keep on hearing a lot of stories about ransomware and cyber threats and locked out and everything. So the question to you, Sanjay, Jaiswal, is that what are the latest things that are happening on the lending technologies, and what should we be aware of and take cognizance of, especially from cyber security point of view?
Thanks, Malcolm. So if you see the threat landscape, it's kind of like a huge list, okay? And being into the lending business, so it's kind of like a really huge list, because here we are giving the money to the customer. So very prominent threat, as you already said, ransomware, okay? But here we have to see how we can protect that and how we can ensure that it should not impact us. The main challenge here is on the cyber threat perspective is our sales team, because they are the front and the customer facing team. And the most important attacks happens with them itself. And then it's going to be impact to the other business or other entities into the organization. So say about the ransomware or phishing, social engineering attack. So they are very much prone to these attacks. So we have to ensure somewhere that our sales team or the customer facing team, in short or indirectly, who are dealing with the customers. So they have to be at very forefront from the security point of view as well. Another point is that I will just take a few examples where we have seen such incidents has been happening. Maybe you are aware about the Uber incidents. Then recently, cyber attack has been happened on MGM Resort, okay, where hackers has called the customer care and get the credentials changed. Okay, so that is something can be happen because sales representatives entire informations may be available with the customer, and that can be easily available with any one of the hackers as well. Also at the same time, if you have seen with the evolving technology like AI, ML, NLB, so this is also going to be a contribute to somehow on this cyber threat. If you have heard about the deepfake, okay, where you can clone the voice, you can clone the photos, you can clone the pictures. So we have to think from that perspective as well, where we can or anyone can get the KYC done on another one's or another's behalf. The similar ones done for getting the mobile connections. So that might be the challenge in the future because of the evolving technology.
Thanks. Thanks, Sanjay. Now, different topic on lending. Since we have a lot of work related to the underserved segments and all, I wanted to ask this question of Nageen. Yeah. So it's a very unique name. So I wanted your views on the data points that can enhance the customer information. And you did speak about some time back on alternate data when we were in the room. So just if you could just express your views on various data points, both formal, informal, which are coming in, which will help us in lending technologies.
Sure. Hi, everyone. So see, traditionally, if you look at it, right, banks or NBFCs have been relying a lot on just the bureau data to serve customers, right? I mean, even today, as you speak, there are a lot of NBFCs, a lot of lending institutions who say that, hey, we will only rely on the bureau data. We don't want to do anything else, right? It's a fair approach. It's a very non-risky approach to take. But once you have only one data point, which is a bureau data point, right, you are only looking at serving customers who are your prime customers, 730 plus, 750 plus, which account to about, like, say, the top 100 million sort of number in the entire Indian population, right? Now, the problem with only the bureau data is like multifold. How do you assess the customers who don't have a bureau file at all, right? The NTC customers. Moreover, in my experience, having worked on alternate data for quite some time, we've seen quite a huge number of customers who are actually sitting in less than 730 score of a bureau, but for various reasons, right? I mean, either they made a mistake, they didn't realize they had taken a credit card, and then didn't pay, but they are not, by nature, they are not bad customers, right? So how do you assess these customers who are actually in the lower band of these bureau scores, and as well as the NTC customers, right? And that's where an alternate data, and when we say alternate data, it's alternate to your bureau scores, right? Like those data points help these institutions to assess the creditworthiness of the customers, right? Like at Digitap, we today work on 7 different data points that help assess customers, and some of those data points are your bank statements, data from your device with the permissions of the customer, telecom data, e-commerce data, social media data, employment data, right? And location data as well, right? So these are some of the data points that are being now taken up by a lot of NBFCs and a lot of institutions. And then people are looking to make sense of that data in the first place, and have also started building models around that particular data, come up with scores on that particular data, try to match that with your bureau scores, see how they are correlating. So there's plenty of experiments that are happening in this space, and people have now woken up to the fact that, you know, alternate data is needed, and these are some of the data points that people are looking at.
Thanks Nageen. I think that's very insightful. Coming back to Tanya, we started the discussion with partnerships and alliances, and from a NBFC, I mean, we have so many NBFCs here, and we have a lot of partnerships which happen NBFC to NBFC, NBFC to banks, HFCs to banks. For lending, you have also partnerships which happen on origination. So what are the win-win items that work for these alliances or partnerships, whichever they be, origination or co-lending, or any other form of partnership?
So win-win activity for both would be, for someone who's sourcing, it is the balance sheet. For someone who's providing the balance sheet, it gives that partner an opportunity to, one, understand a new product, understand dynamics of a new location without putting in its own OPEX. So generally, we end up relying with on the sourcing partner's capability to bring us a new set of customers, or experiment with a new product. And if that is working for the balance sheet provider, that organization can then think of doing this all by themselves, rather than putting it in its own OPEX, spending money to start this line of business.
So, thanks, Tanya. If I can, if I had to do, say, like Ugrow does a lot of partnerships, and you all are well known in the market. I mean, how strong is technology in that piece?
See, technology, I will say today, plays an important role with respect to a particular product category that you may decide to lend to. Now, like what Unni Krishnan said, or what Puneet said, there are certain products, certain customer segments where you may not need intensive technology. The process today is still mostly physical or phygital. There are, so we have those kinds of lenders also, or partners, I would say. We have partners with whom we are today doing absolutely end-to-end faceless digital product, mostly fintechs. Their technology is very extensive. So to answer to your question, it is the product and the segment that today decides the scope of technology which is involved in the entire customer life cycle.
Thanks, Tanya. now we did discuss a lot on partnerships and in terms of, not worry, in terms of the digital transformation journey, the lending technologies, cyber security. I just wanted to focus, the next theme is on portfolio and collections. And this is, I think, while everyone talks a lot about how to onboard seamlessly, how to get customers nicely, how to make a 10-minute, 15-minute quick response. We would like to spend some time on the, what you can say, elephant in the room. So I would like to have Mr. Unni, Krishnan and Mr. Nageen, if they can just talk about something, their experience on portfolio management, customer life cycle, early warning signal, collections activity, technology for collections, like digital collections. Would like to have your insights on this, Mr. Unni.
Yeah, the collection is definitely an elephant in the room. Our approach has been, if you look at the collections per se, today one of our biggest segments that we lend is the trucking segment, the truckers. What we realized is that when we started doing the cost of collections was going up. So we wanted to desperately move on to the digital side, but the question was that how effectively would we be able to do that? So as I said that with our relationship teams on the field, we were able to drive it to an extent and we were able to educate the customers that the best way of making a payment is the digital way. And this trainings that we did pre-COVID really helped us a lot when COVID hit us. When COVID hit us, we were able to do, the trucking segment, they definitely had an impact, but I think because of the need of moving goods around, the trucking customers were able to service their EMIs, but executives are not able to go on the field. So they started adopting to the digital ways of making payments. We also realized another thing. When we started doing the digital way of payments, we realized that we were able to track effectively the amount of customers who were clicking on the payment links and not transacting, or the people who have a tendency to go to the payment gateway but not having the, I would say, the confidence to hit the pay now button. All those things we realized are good training opportunities for us. So we were able to bucketize the customers who knew that they have to make a payment but did not make a payment, who knew they wanted to make a payment, went there but did not do that. So two types of customers there. One is having an intent to do that. The other one does not have an intent. He read it, he did not want to do it. So we were able to, with all these digital touch points, we were able to identify or segmentize the customers and treat them in a different way rather than having one approach that you did not make a payment, let me take the stick. We did not adopt to that. So the digital base is definitely helping us to help us segmentize the customer and tackle the issues in a much more efficient way than how it was happening earlier.
Yeah. Thanks, Unni.
So I'm going to touch a little bit upon one of the topics that you've just asked in terms of the collections with regard to the early warning signals and with regard to the portfolio management itself, right? Like we work with a lot of clients who specifically specialize in digital collections. So they don't have a physical collections arm at all. Most of the new age fintechs that you talk about who focus on digital lending, they're also doing collections the digital way, right? The most important or the most challenging issue that they face as part of the collections or portfolio management is, especially when you are only relying on digital, right, is the connectivity to the customer, right? There is only a mobile number through which they connect to the customer. And once the customer decides, I don't want to repay, he just throws the number away, and then for good, they lose that particular customer altogether, even from a collections point of view, right? Now, from that point of view, right, looking at certain early warning signals become very important. Now, a lot of people have been talking about the account aggregator ecosystem, you know, coming in, helping in terms of loan disbursals, and before the loan disbursals point of view, helping in credit decision makings and all that. But we are actually also developing certain solutions around the account aggregator data to try to see how it can be used for loan monitoring as well, right? And not just at the time of loan dispersal, but can it be used for loan monitoring? For example, you take frequent data from the customer, analyze that data, and look for certain signals which will tell you that, hey, he's paid this particular month's EMI, but looking at this month's data, it might feel as if this customer might default on your EMI going forward, right? So not a lot has been done, frankly, in this particular area, but that's something that a lot of startups coming up with innovations around this area in terms of trying to see how account aggregator data, because that's the most reliable data that you could get from of the customer, specifically revolving around his financial portfolio. So how do we look at that data? Like, for example, do we look at his balances through the account aggregator data and get some sense in terms of, if his balance is going down day by day or month on month, then is your EMI at risk in the next month, right? Or you look at certain salary credits happening into his bank account and you suddenly see there's not been any salary credit happening into his bank account in the last 3 months. Is that an indicator for me to say that, there could be a default here, right? So I think most digital lenders, fintechs to say so, who are relying a lot on digital sort of collections are actually at the forefront of adopting this technology and then seeing how we can utilize data that is coming in, not just from an underwriting point of view, but also from a loan monitoring and generating certain early warning signals point of view as well.
Yeah, Prasad, you would like to add to that?
Yeah, I also wanted to add from a monitoring point of view, I think the CICs also have a couple of interesting products. One is the Scrub, where you can get the entire trade line. You will also have a list of inquiries. There is also a product like Triggers that when anyone, any other lender is doing a bureau check on your customer, you will get an alert. So these are also interesting tools that you can use for monitoring.
Yeah, I think that makes good points. We've covered a lot. I think this is a very favorite topic. Puneet, to you, yeah, I wanted to ask you something on what are the emerging technologies that we are seeing in lending? What can disrupt the segment? What can disrupt the sector? What technologies can help us if we are the early mover or hinder us if we don't?
So I am sure all of us have a view. We all keep reading about it. We all keep talking about generative AI, blockchain. I'm not going to talk about it. I would like to keep it specific to my sector because whether you're talking about banks, liabilities, collections, there are emerging technologies everywhere. And I mean, each one has a different use case. So I'll just specifically talk about mortgage-based products, lending, what we are doing. The first thing that I believe is the digitization of documents. That is still a huge pain area in the lending industry, especially for mortgage products. Because we keep talking about paperless, it is still not paperless. I mean, property papers are not going centralized anytime soon. A lot of documents, even the big banks, while the sourcing journey can be digitized, once it comes to disbursement, the final sanction letter and everything, there is a fair bit of work to be done over there. And I have seen people tend to use the physical mode of signatures over there, especially in the rural, like I was talking about earlier. Besides the Aadhaar, mobile challenges and all those things, there are unique challenges specific in that segment wherein customers are just not comfortable using e-sign. They are comfortable with technology, they are using UPI and WhatsApp, but they're just not using e-sign enough. So that is one area I feel has a huge potential in reducing the TAT of the overall loan processing and improving the overall efficiency. Second, I would not say just on the customer service side, is WhatsApp. I think we have just scratched the surface of WhatsApp right now. This is my view. I think I have I have immense respect for the people who have developed it, for the ease of use, and the fact that they have been able to make it multilingual. Today, I think it's available on 11 languages, 11 or 12. And the way people are adopting it, I think, just imagine the amount of time all of us spend on WhatsApp today. So the way we had net banking coming in early 2000s, then because of the advent of smartphones, the mobile banking coming in post 2010, I think WhatsApp is going to emerge in a big way, especially for the business. So we had the GeoMart. I'm sure you would have seen the GeoMart journey on WhatsApp last year. Just this week, I heard Meta and Razorpay had announced a partnership for the payments on WhatsApp. So just imagine the potential that we have over here, right? I don't have to go via payment gateway. You give my debit card for an IMD. I mean, I can just use a UPI on WhatsApp to do that. Similarly, there are mobile-friendly journeys that can be done on WhatsApp. So there is a huge potential, not just because of ease of use, but because of people's adoption on WhatsApp. I think that is second. Third, we talked about AI. I think the AI ML used in terms of underwriting. Traditionally, lenders didn't really have a data to rely on when they were underwriting, right? And that's where I think a lot of customers who were worthy of credit, they were not really getting the benefits of it. Today, there is immense data. I mean, Nageen has talked about it. The bureaus are available. Using AI ML, when you use data analytics to figure out whether the customer is good enough or not to avail this product, whether it's a home loan or a personal loan or whatever, basis certain specific unique attributes. It could be his demographics, it could be number of persons in his family, it could be number of earning members, the industry he's working on. Industry is a unique parameter. I mean, over there, depending on the rule engine that you want to define, the policy each of the NBFC or a bank may want to run, AI ML based risk underwriting is going to be the key. So these are the three key technologies I would want to talk about. On the tech front, a lot is happening. There is ChatGPT and everything, but I believe, especially in the context of India, it's going to take some time before we reach there.
Yeah. Just to add here, I think one big technology that we need to look at is, and most of us have explored this at any point of time, different points in time, is the conversational journeys for customer onboarding. WhatsApp, as you mentioned rightly, that plus a chat-based journey to originate a customer, I think is something that most of us are looking at different points in time. When it comes to creating ML-based models, I think you need to have a lot of data, right? And therefore, that automatically puts a glass ceiling sort of for different providers. And NBFC, which has a small book like, let's say, 100 crores or 50 crores, they may not even have access to that much data. And perhaps that's why your CICs will also have their own modeling services which are being made available, where their data can be used to create a model based on the customers that you are onboarding. That is one. Second, while you are creating this model, if you are working with a limited set of data, I think one large issue that gets ignored is your model a fair lending model? And let me explain. So let's say I have been operating only in the outskirts of Mumbai. The kind of audiences and underwriting that I will be doing and kind of data that I have is only specific to one set, right? And that may not be representative enough to underwrite for, let's say, when I deploy this model somewhere on the outskirts of Bangalore. And therefore, I might end up taking the wrong decisions if I don't have a comprehensive enough data set. So then the question comes that how much data is enough data?
That is where I think most banks and NBFCs have a local policy in place. I mean, you're right. I mean, anything happening in Mumbai cannot be replicated to Bangalore, especially in the outskirts. And that's where I think each of the NBFCs that at least I am aware of are having a specific local policy for each of the region they are operating in. And talking about conversational AI, I think as a lead generation, it's doing wonders. I mean, WhatsApp is a great tool for generating a lead, maybe giving an in principle initial soft sanction to the customer, whether you're okay or not. Banks have tried it. They tried doing account opening on WhatsApp. The amount of to and fro that happens, the friction is so huge, customers tend to drop off. So they rely on the more conventional mobile app. So at this point of time, like I said, WhatsApp has a huge scope going forward, But I think at this point of time, conversational AI has not reached a stage wherein you could onboard a customer, whether for a liability or an asset product, end to end. This is, I mean, what I have seen. But yeah.
Thank you. A lot of insight there. I hope people are taking notes over here. And I think the last topic before we get into the conclusion is the role of regulation on digital lending, data privacy, IT security, IT management, outsourcing. So I'll just put this question to Sanjay, and if anyone else wants to add to it. But I think the regulation on that and something which we need to do. What's your view?
Yeah, very much too, as I said, like in my previous insight, the attacks and the regulations. So to have proper maintenance of the IT and everything, so discipline has to be there. And discipline will come when we will have some kind of like a regulations. So right now, like if you will see all the regulators, okay, irrespective of the banking or the or any of the BFSI or in NBFCs, so regulators are very at top verge in last, at least I'm seeing for last 6 months, where every now and then they are coming up with some new guidelines to improvise and to put up some regulations from the IT and from security and from the technology perspective as we have evolving into the technology. So IT regulation, yes, that has to be there and it has to be maintained so that whenever some frauds or some risk needs to be assessed, so it can be help us and others like other NBFC can have kind of like a lesson learned from that.
Okay, thanks Sanjay. Anyone wants to add to that, or do we go to the concluding round?
If I may, I would like to add a point on the cyber security that we were talking about just a while ago. While you talked about phishing and various kind of attacks, I mean, my view is cyber security is, as a threat, is there on all the digital journeys, irrespective of whether it's a lending journey or anything else. So some of the topics he spoke about, as long as we have the processes in place, before deploying any digital journey, we are doing a VAPT testing, we are getting the InfoSec sign-offs, we are ensuring the Aadhaar is masked and all the PII data is encrypted and everything. I think it is irrespective of whether it's a lending journey or a liability journey, as long as those processes are in place, I mean, we are covered in terms of the cyber security as long as the formal CISO sign-offs, if I were to say, they are taken.
With regard to the regulation, I just want to add, specific to the digital lending part, right? I think, generally speaking, in the BFSI segment itself, specifically on the digital onboarding side, there's still, I mean, the regulation is clear, but only to an extent, right? Only to an 80% state, right? I mean, there's still some sort of an ambiguity when it comes to, you know, how does a NBFC interpret this particular regulation for an onboarding a particular customer, right? A lot of institutions are still unclear as to when to use a video KYC or when to do a physical, like sort of an onboarding journey, right? What's the difference between a full KYC and a partial KYC? So there is that portion still in a gray area that I would like to say, where I've seen a lot of NBFCs come up with their own like set of guidelines saying, okay, this is what RBI means when they have taken out a guideline on KYC, so this is what we are going to follow, right? And the same applies not just on the onboarding side of things, but there is also some amount of confusion in terms of what data can NBFCs take as part of the regulation, right? What data is considered okay, what data is not considered okay, right? A simple example for that is, are NBFCs or are financial institutions allowed to take financial SMSs with the consent of the customers, right? I mean, it's a gray area if you talk about it, and specifically in the context of the digital lending guidelines that RBI had taken out last year, there were certain mentions of certain portions of data, but certain portions of other data have been excluded, right? So sometimes it becomes difficult for the institutions also, because of certain, like either the wordings are not that clear or the regulation itself is not that clear. Yeah.
Thanks, Nageen. I think we have some of the best sparkling minds on this panel, and just to conclude, the last question is something, if you have your notebooks open, please do make these notes. I'm asking them their use cases or personal experience in 30 seconds each. What exactly is the best experience you had, maybe in your organization, outside, or the use case on loan, on lending, on origination, portfolio management, collection, on technology front related to lending? 30 seconds to each of you, and then we'll be open for questions. We'll start with Tanya.
I would quote a personal experience. I think so. The best digital innovation personally is me downloading a Google app and living on UPI. I have stopped carrying cash for almost 6 months today as I speak. It is just become very easy to walk out of your house and go anywhere without carrying your wallet as long as your phone is charged. This is the best innovation according to me has happened. And yes, it will end up and has started helping lending also with respect to alternate data points that we would need on a customer. But yeah, as far as I'm concerned, this is the best innovation for me.
Truly says Tanya. Nageen?
I totally agree with the UPI point here. I am actually looking forward to the account aggregator ecosystem to have its own UPI movement. Like that, in my opinion, would be the best thing that can happen to the entire finance industry, right? That's something that's not been done anywhere else in the world, along with UPI. So yeah, I'm just waiting for, say, the demonetization event that has happened for UPI. I'm just waiting for such event to happen for an account aggregator space as well. People who have been using account aggregator will know the pain points right now that we deal with on a daily basis, but I think we are getting there, and once we are there, once we see the full-blown potential of what it can do, I think that will be the best experience that you could provide to your customers.
Puneet?
Okay, I'll talk about from a personal experience. When pandemic had struck, I mean, all of a sudden, our RMs in the bank, they were all at home. I mean, there's a cost to the organization, right? What do you do? And fortunately, around at that time, RBI came up with a guideline on video KYC. So we had tools for liability sourcing, SAR and FD, but they were limited KYC accounts with the limitation of 1 lakh. You can't go with a balance of more than 1 lakh. You can't open an FD of more than 1 lakh. Video KYC was a boon at that time. You could open a full KYC, you can convert a limited KYC account to a full KYC. And all of a sudden, all the RMs from home were able to do telecalling and get the full KYC accounts opened there and then. I mean, gladly, we were not affected much because of this specific regulation that we had seen, which allowed digital way of sourcing the complete liability portfolio without any of the RMs on the ground.
Yeah, Prasad.
So I particularly like the work that is happening in the public data ecosystem space. The open data ecosystems which are slowly opening up and being made available for financial services. Account aggregator being the one. There's a national health which is also going to come out, which will impact insurance like anything. The jam stack is there, right? All of this is revolutionary when you compare it to other developed economies as well. And I'm liking the way that how people are fastly adopting, innovating, and creating great products. We have already seen some beautiful journeys on AA, on both PL and HL as well. Right? Loving to see more work, especially on the OCEN 4.0 specifications, which would hopefully help the MSME side of things.
Thanks, Prasad. Unni, I'm hoping you can give us a couple examples. You've been
Yeah, not a couple of examples. I'll just give you one example, which is slightly more than 30 seconds. Yeah. So it goes like this, that we're all talking about digitalization for the last couple of years, and what we realized is that all of us, including me, had this thought that our semi-urban rural customers then cannot do anything on the phone. We realized that we did not know much about the customers when the COVID hit us. We saw a lot of online payments happening, and that's when we realized that, yeah, these customers are tech savvy, they are able to do things on their own. Then we introduced something like an online personal loan for our rural markets. It was a superb hit. That's when we realized within Shriram Group that we have a social responsibility of digitalizing the roots of the country. And with that thought in mind, the last 1 year, we have designed a super app for our customers, and this is currently getting rolled out in the amongst our customers. And in a month or so, it will be rolled out into the across the spectrum. So with this, I'm pretty sure that we will start seeing a lot of our rural customers start transacting on through their app. As I said, relationship management plays a pivotal role here. So we have our brand ambassadors on the field who are going to teach them how to use a super app, not only to make a payment, but also to buy a commodity on the app. So I'm pretty sure in the next 1 year, when we probably see the next time here, we'll be talking about a lot of things that is happening on the Shriram One super app.
Yeah, thanks, Unni. Nice to hear a word called super app. Sanjay?
So I will just talk about my personal experience as Unni says about the online personal loan. So I have just requested for a personal loan. It has been happened just in couple of hours. And while the person representative is on the call, and I just got the money as well in my account. So that was a really awesome technology has been used while I have uploaded all the documents, though I am the preferred customer of the bank, but I have uploaded all my documents and everything on the call itself, and immediately it has been processed. But at the same time, I'm just looking forward maybe in another, maybe an year or two, same thing can be happen for the home loan and maybe for the vehicle loan, because when I bought a home loan a couple of years back, I have signed like a hell of lots of documents. So something expecting to be have a similar kind of for the home loans and maybe other mode of the loans.
Yeah, thanks, Sanjay. And we've been, I think, bang on time. They said 10 minutes for question and answers, and we are here. And we are open to question and answers from anyone. Please do. I can see some hands up. Can someone hand the mic?
Yeah. Can we have the mic to the gentleman? Please raise your hand. You'll get the mic. Please introduce yourself and the organization. Hello. And question to which specific panel member. That will be helpful. Yeah.
Good afternoon, panel. I'm Arnav. I'm representing ESDS. The question is directed to Nageen, sir. Sir, the account aggregator technology is revolutionary because it builds on the digital stack of Aadhaar and UPI, and it's the India stack is here. So my question is, why hasn't it been adopted yet? I mean, what is stopping it for, when the UPI came in just 1 year, Paytm came in and a revolution came. So what is stopping for the NBFCs and the banks to adopt the account aggregator system? Because I believe it's really revolutionary and it can open up the market for the MSMEs, and it can open up the 33 billion credit gap which is there in India. So why hasn't it been adopted yet?
Slightly tricky question to answer, but I'll try my best. Okay. The underlying parameter that is getting exchanged in the account aggregator space is data, right? And believe it or not, data is the prime ingredient for any financial institution, right? So there is obviously a lot of hesitance for data to be shared, right? So now when something like that has to happen, it will only happen through a push rather than a pull, right? So we are just waiting for that push to happen, and it's the regulators and the ministries and the government to enable that push. It's not just on the account aggregator front, right? You take any innovation that you just mentioned, UPI, Aadhaar, everything, right? CICs, all that has happened with some sort of a regulation that came in through the government. right? There was an Aadhaar Act. There was the UPI was also a brainchild of the government. The CICs were part of a regulation that came in 2006, right? So yeah, it is bound to happen, and it will happen with the push from the regulators and the external agencies and the government. We're just waiting for that to happen. But if you leave it to the institutions per se, right, it's not going to happen because everyone loves their own data. I'm sure you would not want to share your data with me, right? So that's the key point here. None of the institutions wants to share their own data, but it's the network effect, right? Once you start sharing data, you start receiving data, and you will feel the network effect kicking in. But for that network effect to kick in, you'll need some sort of an external impetus. That's where the regulators and the governments come in. And once they do that, that is when it will going to happen.
Thank
you.
you.
Follow-up question, sir. Sir, the account aggregator has been actually employed by the RBI. So all the data which you give goes through the account aggregator and then to the bank. So the government has already laid out the infrastructure and all the securities for that. Then even then, why aren't they trusting the account aggregator?
No, it's not a question of trust. It's a question of, as I told you, it's a hesitancy from the FIP side, right? Like, why do I share my data, sort of, right? So it's about time that RBI, tells them that, this is something that we would want to do, and it then gives them some incentive. See, the other thing is also that the FIPs don't have an incentive to share the data, right? What are the banks getting now for them to share the data? And they are right from their point of view that why should I share the data when I'm getting nothing, right? So there are certain nitty-gritties that needs to be ironed out, which will then help the banks to start sharing the data.
Thank you so much, sir. Can we have the next question in the house? You can raise your hand and we'll have the mic for you. Yeah, I think we have one more question. I request you to kindly,
Good afternoon. My question is to Tanya. I'm Hanose from Agrim Housing Finance. Like yourself, I head the partnership and alliances at Agrim. My question would be partnering with banks specifically. There are challenges when it comes to the time frame that actually takes for onboarding a bank compared to an NBFC. So how would you think we can fasten up that process so we can onboard a bank at a more smoother level, at a more faster level? What would be your take on that?
So I will not like to raise your hopes. It's difficult to fasten the process. The only difference, UGRO is very famous because we do downward lending as well as onward lending. As far as banks are concerned, you name a bank, we have partnered with them. The only piece of advice that I would give you right now is patience is the key. They will test you and then only accept you.
I think that answers. Thank you.
Thank you so much. And ladies and gentlemen, a big round of applause for this wonderful panel session here on Digital Lending 2.0. Thank you all to the esteemed panel members, and a big thank you to Dr. Malcolm for wonderfully moderating the panel. Now, I would like to call on stage Mr. Parthish Shah, co-founder and CEO from Knight Fintech, to kindly do the honors. Can we have Parthish on the stage, please? Thank you, Parthish, for doing the honors. We'll start with Mr. Sanjay Jaiswal. Mr. Sanjay Jaiswal from Nuvama Wealth. A big round of applause, ladies and gentlemen, to Mr. Sanjay Jaiswal for his wonderful contribution in the panel session. Moving next to Mr. Unni from Shriram Finance. A big round of applause to Mr. Unni for his wonderful contribution in the panel session. Moving next to Mr. Prasad Ajinkya from Homeville Group. A big round of applause to Mr. Ajinkya for his wonderful contribution in the panel session. Moving next to Mr. Nageen Kommu from Digitap. A big round of applause to Mr. Kommu for his wonderful contribution in the panel session. Moving next to Ms. Tanya Chadha from Ugrow Capital. A big round of applause to Ms. Tanya for her wonderful contribution in the panel session. And our honorable panel moderator, Dr. Malcolm Athaide from Agrim Housing Finance. A big round of applause to Dr. Malcolm for wonderfully moderating this panel session on Digital Lending 2.0. I would request the honorable panel members to kindly step forward for a group photograph, a joint group photo of, and Mr. Shah, if you could also join them for the group photo. A big round of applause once again, ladies and gentlemen, for this wonderful panel on Digital Lending 2.0, transforming the lending landscape in NBFCs. Wonderful discussions and insights we had in this panel session by the experts. A big thank you.